Good afternoon, or good evening, or good morning, wherever you may be. I'm going to look back at the ASX for 2025, go through each sector one by one to see, I'll rate them on the best or the worst performing to the best performing over 2025. Going to look at some of the macro influences that have affected 2025 in Australia, and also some of the ones that may affect 2026. And then I'm going to sort of look ahead to the sectors that may be best to look at for 2026. Okay, I'm going to start. There is a disclaimer here. The information provided in this video is general informational purposes only. The Relaxed Aussie Male, that's me, assumes no responsibility for errors or omissions in the content or for any actions taken based on the information provided. Always ensure you do your own research and or consult a licensed professional before making investment decisions. That's just pretty basic. I wouldn't be watching anyone on YouTube, let alone some bum with a camera and taking their word as gospel. It really is information that may make you curious or may give you some direction of where you may want to spend your energy. But don't just buy shares or sectors or anything because some idiot on YouTube tells you to. There's some good free advice. Okay, anyway, let's kick off. We're going to have a look at what's on this video. We'll look back at what the Aussie market has done in 2025, the XJO in general, which is the top 200 stocks on the ASX. And then we'll break it down into the sectors, the 11 sectors, and go from the worst sector through to the best sector in 2025. We'll discuss the potential of each sector in 2026. So rather than looking back, we'll look forward. And we'll look at some of the macro trends that may influence the Aussie market in 2026. And also look at some individual stocks in 2026. I'm not sure if I'll do that on this video or whether I'll do a separate video. I want to keep this video to sort of less than 20 minutes if I can. So if it looks like it's going over that, I'll do a separate video of individual stocks that I may be looking to buy or already own or just have a good opinion of in 2026. Anyway, let's just kick it off by looking at the XJO, the top 200 stocks on the ASX. They opened the year at 8,159, ended the year at 8,763. So overall, it was a 7.4% win on the XJO. So not a terrible year, not a stellar year, not a memorable year, but an up year at least. As you can see, things were going along quite well up until mid-Feb. Then we started getting some murmurs out of Trump about what he might do with the tariffs and those sorts of things. And obviously the market tanked a little bit there early April, and it hit its low of 7,169. So virtually down 1,000 points at that point for the year. But it did recover quite well between April and August. It had quite a nice run up and then sort of just leveled off for the remainder of the year. As I said, up 7.4%. Now we're going to break that XJO down into separate sectors. So there's 11 major sectors on the Australian market, and we'll rate them. Well, they rated themselves on worst performing to best performing for 2025 up to December 28th at least when I'm doing this video. There's still 4 trading days to go. I think no, there would be 2.5 trading days, I should say, to go to Monday, Tuesday, and a bit of Wednesday. But I'm away next week, so I had to do this video now. It's near enough to the end of the year. Okay, so let's have a look. Number 11, the 11th or the worst performing sector of 2025, is XHJ, which is the healthcare sector. As you can see, it was going along quite swimmingly. It was just holding its own at least right through until August, and then pretty much thanks to CSL, which is the biggest company on this in this sector and one of the biggest companies on the Australian market altogether, that crapped the bed and took everything with it, the whole sector. So it ended the year down 24.5%. Obviously, some of the big players in this sector, we've got CSL, we've got Sigma, SIG, and Pro Medicus, PME. It was a pretty bad year overall for the healthcare sector, ending down 24.5% and taking the coveted worst position, 11th on the table for 2025. Okay, coming in at 10th was the XIJ, which is the information technology sector. That sort of fell out of bed around the same time. We may see a bit of a correlation later on with what was the best performing sector, which took over from the information technology sector. As you can see, it was plodding along, not doing a lot as a sector all year. And then in October, it fell out of bed and was down 20.4% for the year. Some of the big players in this sector are, of course, WiseTech, Xero, XRO, TNE, which I do hold, which is Technology One. They're the three bigger players in the sector, and all of them had a pretty poor end to 2025. So the information technology sector comes in at number 10 now. Number 9, we have the energy sector, which was down only 3%, which overall wasn't too bad, considering oil didn't have a great year. But as you can see, it fell out of the bed when the whole market did back in April. But it recovered okay and just plodded along from that point. And not a terrible year, I thought, for the energy sector, all things considered, to be down just 3%, to come in as the 9th worst. Now, 8th on the table, we have consumer staples, the XSJ, down just 1.5%. Some of the big companies in this sector are, of course, Woolworths, Coles, and A2M. I didn't mention the big ones in the energy sector, Woodside and Santos, and, of course, Ampol there as well. But in this sector, consumer staples, again, it was a bit of a non-event of a year. Had a double top there, but didn't completely fall out of bed, just down 1.5% for the year. So not a great sector to be in 2025, but as you can see, not the worst, which the healthcare took out with a 24% loss overall. Now coming in at 7th is its little brother there, consumer discretionary, up 2.1%. The big players in this sector, of course, Wesfarmers, one of the bigger stocks on the market. We had Aristocrat Leisure and JB Hi-Fi in there as well. So as you can see, things were riding pretty high. Wesfarmers was getting up near $100 a share, but couldn't hold those gains through August, and slipped, and the whole sector slipped later in the year. For a 2% gain, it was up, but not a fantastic year overall. About mid-table there. That was the consumer discretionary. Now, number 6, we have the communication sector. Companies such as Telstra, REA Group, and TPG there. Again, didn't do a massive amount. You can see it's opened up at 1627, ended at 1738, that index, for a 6.8% gain. Nothing to be sneezed at. I guess that's within sort of line what the whole market did for the year. So not too bad. Middle of the range was the communications sector. Now coming in at number 5, we have, this is real estate, up 6.9%. So again, fairly well in line with the market. Had a bit of a bump up in the last few days to get into 5th place. As you can see, it's very similar to the other charts. Had a bad sort of Feb through April, and then recovered somewhat after that. So in 5th place there, XRE, the real estate sector. In 4th place, XU, which is the utilities sector, up 7.9%, again sort of within range of the overall market in general. It didn't do so bad when everything fell out of bed in April. You can see it didn't suffer quite as much. Had a bad day there, but recovered most of those gains within that day, or most of those losses, I should say. And then it's not one of those exciting sectors that's going to do a lot, but an 8% gain, nothing to be sneezed at, I guess. That is our fourth place, utilities. Now we're getting to the top three and the bronze medal winner for 2025, the financials. Of course, the big players there are the big four banks and Macquarie, of course. Plus, I mean, Australia prides ourselves on our financial institution. CBA itself would be one of the biggest banks in the world. So the sector ended up 8.5% for the year. Again, sort of in line with the market. Nothing extraordinary. But, I mean, this is on top of, decades, really, of fairly good performances, especially from the market-leading CBA. Sorry, my dog's having a sneeze back there. So, yeah, not too bad, 8.5% for the year. That's third place to the financials. Now, second place, it is XNJ, which is the industrials. Big companies like Transurban, Brambles, and Computershare in that index, up 9.3% on the year. Again, a fairly similar chart to what happened to a lot of the other sectors, with a bad April, a bad beginning of April anyway, but not quite as bad for the industrials, and ending up 9.3% for the year. Now to the number one for 2025. Probably already guessed this one. It is XMJ, the materials sector. Now, I was talking earlier about the information technology sector, how that sort of just fell out of bed from August, September. Well, this is the sector that took its place. The materials sector had a fantastic second half of the year, ended up 32.8% for 2025. The big players there, obviously BHP, Fortescue Metals, and Rio. Again, I talked about the financials, the banks, the pride of Australia, but really this materials sector with these big companies are, really what drives Australia. Going to have to excuse me a sec. My dog's decided to pick up his toy. Oi! Oi! Stop squeaking. Yeah, he's having a bit of fun. Must be dinner time, actually. Oh, it's well past dinner time. Yes, so there we go. The materials sector is the number one for 2025. I'm going to look at a couple of the things that were driving the materials sector in 2025. And at the end, I'll have a look, and I'm going to give some opinion on what I think will be the best sectors in 2026. I'll rate them from 1 to 11. That's just the total there for the year. I'll put myself over there. So, yeah, the materials sector up 32.8, beating industrials and financials. Oops, that's the wrong way around, isn't it? I think that should be the other way around, 8.5 and 7.9. Real estate, communication, consumer discretionary, consumer staples in the red, with energy, information technology, and healthcare. 2025, nearly done and dusted. Now, looking at a few of the macro trends for 2025, one thing that's very interesting is what's happening with the Australian dollar versus the US dollar. As you can see there, it started the year just below 62 US cents, ended the year just above 67 cents. That's 8.4% gain. Now, it's a bit of a double-edged sword. Obviously, most things are in the market. Sometimes good things happening means bad things are happening. So with the Australian dollar going up, it does sort of start to hurt our exporters, so our mining companies particularly. But at this level, it's still relatively low, historically lower than normal. So it's not too bad. I think what will hurt is if it keeps going up. As you can see, it put on 8.4% in 2025. If I had to give my opinion on it, and if it's just opinion, I think it will continue to go up in 2026, as as you'll see later, the minerals that we mine here in Australia are going up quite staggeringly, some of them. So that will put pressure on the Australian dollar, and I think we'll look back at this in 2026. I'll do another video, and I think we'll see the Aussie dollar a fair bit higher than 67 cents. That is my best guess. As I said, don't take that as gospel, but I believe that will happen. Looking at some of the outstanding performers this year, and obviously silver's starting to get a bit of notoriety, but there's still 3 or 4 trading days to go in this year, and silver is up 174.6% from the start of the year, opening at $28.90 up to $79.30 now. Just an absolutely incredible year for silver. And I do own a bit of silver, and I'm glad I do. And I'm hoping that this trend will continue. And there's a lot of tailwinds for silver at the moment. And I'm not sure what's going to stop it. I'm sure something will come along, because something always does. But at the moment, I'm happy to be riding silver. And as you can see, it's had a fantastic year. I actually positioned myself in silver back in 2018, so it's been a bit of a long, boring hold, but starting to pay benefits now. And yeah, hopefully 2026, even if it's not as good, let's hope it's still a positive year for silver and just maintains those gains. Gold, also another good year for gold on top of a good year last year as well. Up another 72.8%. To close on the 28th of December, as we are today, it's at 4,533, which is pretty much near its absolute top of 4,550. Again, we're a big gold mining nation, so this is fantastic for our miners. Some of the big names like Newmont, who I'm in, and I actually bought them when gold went through 2050. I think it was around the middle of last year, and I decided to buy some Newmont, who are the biggest gold company in the world. I was in at 65, and they're hovering around 160 now. If gold continues to, well, even if it holds, I think those gold miners will probably rise even a bit more than what they are. If it goes up, then the sky's the limit. Yeah, so another good year for gold. This is an interesting one here, copper. As you can see, it's been extremely volatile, but still ended the year up 45.3%. There was a couple of big surges down during the year in April when the tariffs were going on, all that talk from Trump. Then also again in August, when I'm trying to think what happened. I think this is where Trump left this off, the critical minerals list, and it took a massive one-day dive from around around $5.70 down to $4.40 in the one day, or about $4.60 maybe in the one day. It dropped over $1 anyway. But since then, it's pretty much slowly but surely made all those gains back. And again, I think copper will continue. Personally, I think it will continue through 2026. There's tailwinds for copper, and just for the electrification of the whole world. I think, it's if it doesn't maintain its price, it'll go up. That'll be my prediction for gold. Again, don't take it as gospel. Do your own research on it. But that was copper for 2025, another good year. Now, this is just me having some musings. This is what I think may happen as far as what the sectors will do in 2026. Had a bit of a play around. We can go back at the end of 2026 and see how close I was to these. I went down, you can see on the left-hand side, that's the position these sectors finished in this year. And on the right-hand side in blue, I've put where I am expecting them, or guessing they will finish in 2026, the end of 2026. As you can see, the material sectors on top, and I am going to predict that they stay there again in 2026 and have another good year. The energy sector, which finished 9th this year, I'm pumping them up to 2nd in 2026 with a bit of recovery in the oil price. I think it's been, well, obviously talking about Trump a lot, aren't I? But he's program, drill baby drill. There's a lot of oil out there. It's done its job in as far as keeping inflation low, because oil affects everything regarding inflation. So it's done its job thus far. I'm just not sure how long they can keep it at the levels where it is. And my best guess would be that it starts going up again in 2026. And a lot of those big oil stocks look quite cheap. Big juicy dividends. I see Woodside dividend of around 7% at the moment. Doesn't mean they're going to go up. Doesn't mean they're goodbye. But just looking at the macro, I think, in my opinion, is it may be a good year for the energy sector. Third, I've got consumer staples. If there is a bit of a downturn, if inflation does go up, I'm not going to say consumer staples is going to, excuse me, is going to have a great year. I just don't think it's going to be as bad as it was this year. It'll be higher up the table, in my opinion. I put it in for third. Industrials to still hover around in fourth. I put the utilities in fifth. Communication sector hanging around exactly where it was this year in sixth. Healthcare making a bit of a recovery. I'm not saying it's going to have a great year. I just think it might be a bit better than it was this year in seventh. Information technology, again, a little bit of a recovery. But I really think the material sector is going to be the big winner this year, and information technology will be forgotten for a while. Now, I've put real estate and financials at 9 and 10. If we do have a bit of a downturn, those are the two that will probably suffer the most. And also consumer discretionary, again, in a tough year for the market in general, consumer discretionary will suffer. That's, again, opinion, best guess. Do not make any of your bets based on that information. Now, we're at 22 minutes, so I'm going to leave it there. Thanks for listening. As I said at the start, this is a video for informational purposes only. It is my opinion. It is some guy on the internet with a camera. Don't take it as gospel. Do your own research. If it makes you think, or you want to send me any questions, do so in the comments. I'm happy to discuss and talk about and even listen to your opinions, because I enjoy talking about this stuff, of course. But yeah, thanks for listening, and I will speak to you all very soon.